Welcome back. You're still tuned into Power Breakfast, and the big data point that came through for our own markets yesterday was that India's consumer price inflation has gone up to a 5-month high of 7.4%. This is for the month of September from 7% that we saw in August. This is the 9th straight month of retail inflation breaching the RBI's target band. And meanwhile, India's factory output also contracted by 0.8% in August. So Lata is here now with all of her analysis and how she's looking at these numbers. But Lata, this really does not look good at all.
At the outset, it's a bit of a negative that inflation is higher than what the street was expecting and growth is lower than what the street was expecting. But it is only marginal. I mean, it's not disastrous. 7.4 is the number compared to CNBC-TV18 and everybody's poll of 7.3%. The sad part is that the upside has come largely from food. I mean, 8.6% rise, and very, very basic food items. Cereals and veggies, double-digit inflation in both of them. So that is a bit of a worry, but it was not entirely unexpected. The worry really will be how October turns out as well, because there have been a delayed withdrawal of monsoon. And if it continues in October, then people will be a little worried that the Reserve Bank targets won't be met. But more important, core inflation, which is you take away the volatile food and fuel items, even that is 6.1%. On expected lines, but that's above 6%. That's the point I'm making. And as you said, the 9th month, this was always known. For 9 months in a row, the MPC has not been able to keep inflation between 2 and 6%, which is their band. So they will have to meet and draft a note to Parliament explaining why they failed in keeping their mandate. This could be, preying upon them in future MPC meetings. Oh, we have to deliver. And so there are economists who have moved from an expectation of a 35 basis point hike in December to even 50 basis. I mean, there's slight upward bias to inflation and therefore interest rate expectations. On the growth front, IIP at minus 0.8 was nobody's guess. Everybody was in some degree of positive. Pulled down, we knew already that the core sector numbers were bad for the month of August. We had an advance number coming in on 30th September. Consumer durables and consumer non-durables. I mean, 10% contraction in consumer non-durables ties in with the fact that, remember, most of the FMCG updates were that it is barely mid-single digit growth. So it is looking like there's problem at the bottom of the pyramid. I would worry a bit on growth.
All right, Lata, thanks a lot for taking us through all of those numbers and your